StockCo started in 1995 in New Zealand, and we came to Australia in 2014. And from a resilience point of view, together with our clients, we've endured flood, fire, drought, because we're in it together. And all the while, we're frantically trying to raise money and keep our business funded in the background. And look, it's no mean feat organising finance for what we do, and it's been a real struggle throughout our journey in business. And I'm very pleased to say that in that time, we've funded over $3 billion worth of livestock, and we've paid out $550 million worth of margin to our clients, and we think that's a real feather in our cap for helping industry. And excitingly, following on from that, it's pretty hot off the press for those of you that read Beef Central, we actually sold, StockCo was sold on Wednesday to Heartland Group Holdings, which is a dual-listed NZX ASX company. And Heartland's a niche player. They have a banking license in New Zealand, and they're really focused on narrow niches in the market, being best or only, and the StockCo theme of just funding livestock really sort of fit in with their strategy. So we're really excited about that because it gives us something that we haven't had, and that's really strong balance sheet and the ability to drive down our cost of funds and develop our products out and be more competitive for our clients. So we're really looking forward to that milestone and what happens in the next 12 months. So that's a bit of background. I'm not here to talk about StockCo. I do just want to set the scene in terms of what non-bank livestock funding can do for a business. And one of the things that is really important to me is, and we say it all the time, it's about operating your business at 100%. And we'll talk about that. So when it comes to succession, there's a real balance, and this is probably a bit of a personal opinion, and what we see, we do fund a lot of succession transactions. This is our experience and what we see in the market. But there's a real balance of having debt and operating your business at 100%. Succession planning, more often than not, requires debt funding for the next generation to take over. And traditional funding is typically limited by policy, which can actually prevent a business from accessing the capital that they need to run at 100%. And what is operating at 100%? Well, to us, that's matching your carrying capacity to your stocking rate. And that opens up a whole other raft of discussions. I think you would have heard a little bit about that yesterday, understanding what your stocking rate is and how much grass you're growing, etc. But I'm not here to talk about that. I'm here about how to provide capital to make sure you're maximising that. So here's a little tip. It's the same for StockCo, the way we borrow our money. What is the weighted cost of your capital? And this is very rudimentary, but stick with me. If you're going through succession, you're accessing capital, you're typically going to have a few funders involved. And what that looks like and understanding what your actual weighted cost of your capital is. My example here is you might have a $3 million facility with your bank, and don't quote the interest rates. Just as an example, you're paying 3.5% interest only. There's no principal component in here. It's very, very down and dirty. You might have a StockCo facility. It's $500,000. It's fully drawn, and it's costing you around 10% per annum. You might have some equipment at 6%, and depending on where you are in the country, you might also have some crop input finance, which is probably around 10%. Your total debt versus your interest component across all of those facilities is 4.74, and I think it's really important that you understand that in context. So this slide, it just talks to, again, our experience, what we see when we have a young farmer that comes to us looking for support in a livestock funding facility. So you're looking to take on the family farm, what now? This is zero rocket science here, guys. It's about demonstrating experience, and get out there and borrow some money, get a credit record. There's actually, you wouldn't believe the amount of people that come looking for finance that have been in the bush and don't really have much of a credit record. It's, you do think it's hard to believe, but get a StockCo facility. That's my plug. Just trade some stock and build a track record. Have something that you can show someone that you've done, you've got some experience there. Another just, again, it's just a comment, work away from home, gain some other perspective and draw some knowledge from outside your circle of influence. Very important. This is a very simple concept, but you need to have a plan. Seriously, build a business plan. And be really clear in what your goals are and how you intend to achieve them. Next dot point is keep records, measure and compare. And I can't stress this one enough. When you're going to a funder or anyone, a business partner, if you're able to point to your success, identify areas for improvement, and provide detailed information to those business partners and funders, it's not only key to actually securing finance, but it actually puts you in a really strong position to negotiate a better deal. And so many people don't do this well enough. I really have to stress that point. Keep your records, measure and compare, not only for your own profitability and bottom line, but to be able to sell your business to someone else. Last one's something that gets overlooked a lot, unfortunately, in industry, but it's becoming more and more prevalent, is that's continuous development in yourself. We are getting spoilt for choice now when it comes to business development. I have no affiliation with the people I've listed here, but I'm talking about companies like RCS, doing a grazing for profit, or KLR marketing. Just keep investing in yourself. Just want to talk a little bit about funding growth. There's a couple of dot points here. I'll have a disclaimer about banks in a second, but because I'm sitting in front of a very big bank outfit. But it's about using your traditional bank capital to expand your carrying capacity. And I think the next comment I make, and this is really important, is that traditional funding is the cheapest source of capital and the most effective way to fund a land acquisition or capital development. And I can't stress that enough. What we do is we just allow leveraging to actually increase your carrying capacity to match your stocking rate, get you back to that 100%. And when you're leveraging to increase carrying capacity to fund land and acquisition or development, it can leave you short of powder to actually run your business at 100%. So obtaining something like a specialist livestock funding solution, no matter who the provider, or we could apply the same methodology to crop, it really helps you run your business at optimal stocking levels. And the really key thing here is maximising the return on your assets by generating further revenue that you might not otherwise make under traditional funding lines. And this then helps you contribute to other costs, such as the payment of said interest and principal to your bank facilities or funding further development. Drought recovery is a good one, and one that I'm very proud of in terms of where StockCo's played a role here. And I just want to talk through our experience at the tip of the spear on this one. And I think it's about making sure that you're ready to respond. And traditional funders, and this is for what it's worth, is that there's a slowness to regain appetite in industry after a natural disaster such as a drought, or there's just a period of confidence that needs to be restored to industry. And this can really limit the access to capital when it's seriously most important. Timing's absolutely critical when you're re-entering the market. You've had a weather event, you've grown grass, you're ready to start trading, and it can be very hard to access the capital that you need. And having that access to capital is really important. So we saw this firsthand on the breaking of the drought, and I have that in inverted commas because I understand that it's not a widespread break of the drought. There are still people that could do with some rain. But in that period where the wider drought did break, in the 9 to 18 months post that period, we paid out some of the largest margins we've seen in our history in funding livestock, as people were able to get back into the market and buy animals. They benefited from not only the weight gain, but a significant upside in the spread in the dollars per kilo. And we're really proud of our involvement in that, and some of the turnarounds that we saw in businesses that were really struggling. Having that access to capital gave them a really, really good head start. Tim's tip. Have access to capital. You saw that one coming. Just an example about how this actually works. If you're going to a traditional funder and you're asking for an increase, our experience being on the other side of it is that it can take 8 weeks to get an approval. Now that's 56 days. If you've got livestock in the paddock for 56 days, they've just arrived, they're on good feed, they're going forward. They'll take a few weeks to settle in. If you average half a kilo a day gain in those 56 days, and you put on 28 kilos at $5.50 a kilo, you're $154 a head better off by having access to capital, which someone like a StockCo can provide very quickly. The difference in actually funding that over a 210-day trade between traditional funding and us is $86 versus $30. It's really simple maths to get you back in the game quickly. And like I said, we've had that experience of seeing this firsthand. I think that wraps me up. I'm really happy to take a few questions if anyone has any. Otherwise, I'll be floating around for a little while. But if anyone does have any questions, feel free from.
What do you do with, like, going back into hard times when we do see a cattle market possibly rebalance? How does that work if someone realises a loss?
So the process that we've just been through selling the business, that's probably the most common question that prospective buyers would ask, and particularly about market. We're at high levels. What happens if there's a pullback in price? We have a saying internally that weight beats rate, and whilst we're in good seasons, then there's a lot of data and a lot of history in not only the ECI around weight gain and price movement, and so we backtrack the ECI since inception. And there's if you're just running a simple weight gain on a 6-month trade at 0.6 kilo a day, there's only 2 times that in the history of the ECI that if you bought on this day and sold on that day, on a 0.6 of a kilo per day weight gain, that you would actually lose money on the trade. And I guess on top of that, not everyone buys all their livestock in a trade on one day and then sells all their livestock in a trade on one day. You get a top, a middle, and a tail. So all we do is livestock, and we just get it. So there will always be a top, a tail, and a middle, and it washes out the trade. I think what we have seen, and the most recent one was probably the last year or the year before, COVID hit, massive disruption in processing of lambs. There's a huge dip in the lamb job, particularly around where I'm from, around Tamworth, where the fire is currently going as we speak, and it's quite hot here. So I think what we did with those particular trades is we capture so much data at StockCo. We have the purchase weight and the purchase price, and we get the sale weight and the sale price, and we know the performance of weight gain that our clients have. We work with our clients based on their history to maybe crystallise the loss on a trade, and this is really important. Market disruption like that, we crystallise the loss, we park that there as a loan, and we put them back in the market in the dip and trade them out of it. And that's our mantra and how we look to work through those sort of scenarios. But that question was just fired at us consistently over the last sort of 6 months going through the sale process, because it's pretty important.
Is there a minimum and maximum sort of limit you look at?
Facility-wise? Yeah, look, we have a minimum facility limit of 100,000, and maximum we can maximum we can do. We've done facilities 10, 20 million before with the right counterparty.
And it's secure by livestock, so effectively you take ownership.
Yeah, when I said before about the trading limits established, you send us the invoice. When we pay the invoice, we actually get a clear title over the livestock, and that's our security. We may take guarantees from the business or the landowning entity to support the trade, but in normal course of business, our security is the livestock that we've funded only. It's got nothing to do with your other livestock. Just we put our limit in place, we fund our livestock. That's our security.
You fit in with the banks mostly with that, like the big traditional lenders sort of happy with the system? Is that not?
Yeah, absolutely. And we don't disrupt the existing relationship. We've actually very proudly had situations where a bank will come to us and say, hey, we're looking at doing this deal with this client. We notice you've got a facility. He wants to buy the place next door. It's going to stretch us out. We appreciate that he's going to need some trading horsepower. Can you guys provide a limit? And we've actually worked together to get a deal done. Doesn't happen with every bank, but it does happen, and that's where we sit. Like we don't compete with banks. Our rate, the cost of our funding, and by the time it gets to our client, it's always the cheapest source of capital. We're there to do the extra part where they're going to run out of puff. Yep.
Do you only finance landholders, or do you running a business?
Yeah, it's a good question. We can fund producers that don't actually own land, but we're just going to do a lot more due diligence around their history. And back on the slides before, I said get some experience. You know, like if you can go to if you lease land and you can go to a funder like StockCo and say, I've been doing this for 5 years. Here's my average margins. You know, these are all my stats. These are all my records. Will you back us? And we've got a lot more appetite to back someone with that track record that doesn't own land than the generational producer that has owned land in the family for decades or generations. Yeah, that's a good question.
Excellent. Thank you, Tim.
Thank you.
Good talk.